We are in the final panel discussion that's about family offices in COVID-19 era, changing investment strategies, challenges and opportunities. Moderated by Kiran Dutta, CEO SoHo Ventures. And all the panelists, they will introduce themselves. Over to you, Kiran. So Olivia is back. How are you, Olivia? Fine? All?
I'm fine, thank you.
Okay, thank you.
God, I was a bit worried there. I thought, wait a minute, I'm not getting on here, and I thought, but I'm here now. So I'm looking forward to it.
Thank you.
Awesome. Cool. Thanks, Rajan. So let's get started. I know it's quite late there in New York, so I'll start with saying good afternoon and good evening. I know the last panelist joined from Singapore. It's quite late there. Anyways, good to see you all, and Olivia, good to see you again. Olivia is one of my speaker at London conference, I think back in 2019. So good to see you again. So let's get started. I know I purposely did not want Rajan to do the introductions because I just want to hear from you on just a minute or two about a brief introduction about you, the firm that you represent or the family offices that you represent, and a brief about your investment thesis and the work that you have been doing. So let's go clockwise. We'll start with Marinella to start with, and then we'll move along.
Okay. We are a family office based in Hong Kong and in Dubai. We started in 2013, and in the same time, because we had some partner that look for diversification in intangible assets and digital assets, they asked us to see how they can invest in Bitcoin. So we start in that time to study the cryptocurrency, and after also the ecosystem, the blockchain that is behind the technology behind the Bitcoin. In 2015, we launched a BTA Innovation Lab that is an alliance of expert technical people that do research and development and innovation on the technology behind the Bitcoin.
Sure, wonderful, sweet. I think we have a lot to discuss about Bitcoin and the recent, I would say, the surge of the story, and then we'll talk about the whole asset class in a bit. Olivia, to you.
Oh, right. Okay. My name is Olivia Cooper, as is shown on the screen, and I'm head of private wealth and family office. I'm a lawyer here in London. Well, I'm not in London at the moment. I'm in my home in Surrey. But normally I'm in Mayfair, and our office is still open, so we're still in Mayfair despite lockdown, and hopefully that will be over soon. We represent family offices, normally single family offices, and I set them up. I deal with strategy and succession planning and education in family offices, so the whole kit and caboodle, as we like to say. In terms of investments, we're seeing a great move from EV to hydrogen. We're seeing mobility, social impact, more moving towards looking at true social impact and the impact of investment on actual people and salaries and employment matters. Social unrest is one of the big criteria at the moment due to obviously the worries of unemployment. So that's where they're looking mostly for investment at the moment.
Sure, thank you. Tugce, to you.
Thank you. So, well, first of all, it's so good to meet everyone. So I have been with Angel Labs for the last 10 years, a San Francisco-based investment advisory firm, and we have been advising more than 600 holding companies and family offices in 44 countries on their investment strategies, purely in venture capital. So that was fund investments, taking LP positions, pre-IPO share purchases, or direct investments into technology companies from seed to growth equity. And last year, I have also joined forces with two of my very good GP friends from San Francisco to build a new fund in Europe with a Europe and rest of the world mandate, but with a 70% focus on Europe, at the intersection of sustainability, United Nations Sustainable Development Goals, and fourth industrial revolution. What that means is, yes, we are looking for sustainability, impact, purpose, but we want to do it with our investor hats, and we're looking at technologies that will reshape traditional old economy industries. So we're looking at efficiency gains around logistics, shipping, maritime, supply chain management, production cycles. So because our investor base is mostly family offices coming from their very traditional industries as well, we're very aligned with what we want to invest in and where we want to have the impact and see the impact. And we are a female majority owned fund.
Wonderful, it's great. Okay, so I think we have three set of three speakers coming from altogether three different backgrounds. So I think we have a lot of topics to cover. So let's get started with Marinella. How are family offices reacting, to the recent surge in Bitcoin, and then so what are the trends that you're seeing exclusively within the family office space to the adoption of Bitcoin or blockchain as an asset class? So just help us understand, from your experience, the pros and cons, the kind of family offices who are actually jumping onto the bandwagon and the laggards there, and might be a couple of reasons why, if there are any apprehensions why they are not choosing this particular asset.
Okay. When we start to invest in Bitcoin on behalf of our partner, it was just a safe haven. It was a reserve of value, because they want just to preserve their money, because they were from some jurisdiction that where the money doesn't worth just too much. For example, from Libya, because from Venezuela, from Iraq, so from country where the money were not stable, the currency. So it was a very good investment for them, because at that time Bitcoin was worth $100. So they become rich, and because they had the problem also with the passport, because they cannot be eligible for a bank account, for example, in Dubai, where we have also company. Just to do that, we did some agreement with the major real estate company, where in Dubai there is the law that if you have a real estate worth at least $1 million, you are eligible to have investor visa. So what we did the agreement with the real estate that they accept digital asset against real assets. So with the digital, because we cannot mention that it is a cryptocurrency, because at that time it was illegal, but not illegal, because we every time that some of the government say you are doing something illegal, we say it's not regulated yet. It's not illegal. So we start to do mentorship session also for the government people to do that. And after in 2015, 2016, they did the first step to put government service also on blockchain. This was my start, and after that point we organized meetup. Before meetup, with the few people that we were feeling as we were nerd people, and after we start to organize with government, it was an exciting journey, because we were pioneer. So we as you look at a baby when he's born, and after up that he go to university. So it was challenging in the beginning, because nobody believed us about the potentiality of blockchain, because what also make the family office investing in this technology, for example, is about the trust between people that don't know each other. It's about the non-necessity of third parties, and also the transparency of the process.
Sure, and yeah, absolutely. That's a great insight there. So, with regards to, so when we talk about Bitcoin and blockchain, right? So people actually talk these two topics interchangeably, and that's one area where we are actually trying to educate family offices at SoHo, that these two are not one and same. One is in a cryptocurrency, it's a stored digital value, and then another one is blockchain, which is decentralized network where you can build everything, right? The traditional legacy system can be completely brought onto the blockchain, which is happening at an accelerated pace at the moment. So when you so just help us understand a little bit on your investment thesis. So as of today, are you still focused on Bitcoin, or are you looking into the sub-asset classes within the whole blockchain as a topic? Are you looking at any projects in DeFi space? Are you working with any crypto hedge fund? So what is your investment thesis like at the moment?
Tokenization of blue chip assets. This is the key. Non-fungible assets. This is the key for me. And also, alongside this, education for people, because will not be mass adoption if you don't educate people to be inside this market. So education for people, healthcare, and tokenization of assets.
Okay.
Contemporary.
Sure. Okay. We'll come to tokenization of assets in a bit. So cool. Thank you so much. So Olivia, let me come to you. So you come from a deep impact space, and also just help us understand. I hope first of all, that you and the family are staying safe and things are okay in London at the moment. So just help us understand. What have you seen in the family office space? You closely work with a lot of families and you advise a lot of families, especially on the impact investing. So what are the trends that you have seen within the space, during COVID, and I won't say the post-pandemic, but I think we've passed on the first phase or the second phase of the pandemic at the moment, and I think we have entered into phase 3. So what's the thought process like within the family office space at the moment?
Well, at the moment, to be frank, we are in lockdown. Obviously, still here in London, but England and the UK is very much open for business. We're still operating, and despite the pandemic, there has been growth in many markets. So there is a positive feeling at the same time as this constant panic about what's going to happen next with COVID. So it's a sort of a juxtaposition there, but we are remaining positive. That's the key thing I would like people to take away from this, is that there are markets, they are growing, and there are investment opportunities. The thing that family offices are seeing, and in trends wise, what we are, there are the concerns, the areas of concern. So for example, when the Association of Financial Markets in Europe came out with some quite not unusual, but quite alarming data, with the Eurozone facing $720 billion of a capital gap. And that will mean that they won't be able to cover, so the normal channels will not be able to cover the expected 1 trillion euros of loss made by businesses in the Eurozone because of the COVID pandemic. So these people will be, these companies, these businesses will be looking to alternative areas for investment. And so we're seeing more of these existing, well in the market companies that would normally be looking at very traditional areas for financing are turning to family offices as now their first port of call for potential new rounds of financing. And this is where so there's much more competition for family office investment money. In terms of movement in family offices, we've seen a big trend away from funds to direct investment. So the families are getting more involved with their actual investment criteria. And that's probably being driven mostly by, people say about the impact investing and sustainable investing. And yes, that has made an impact, but it's also because you're seeing a difference in who runs family offices. So we've seen a great many more family offices who have been set up because we have entrepreneurs who have made their first round of capital. They are now in a comfortable place. And as part of their whole family setup, we are setting up family offices for them. But being the fact that they're entrepreneurs, and I'm sure some of the ladies who are speaking on these panels will agree, they never lose that wish to get involved. So they're not happy just putting their money in some sort of packet, which will then be used in. They want more control. They want to know what's happening, and with that comes a shift in how they're investing. So in terms of, there's no longer the sort of dip in, dip out, entry, exit strategy within 5 to 7 years. They are understanding much longer term planning. So we now are going back almost to when I first trained as an economist many years ago, when we had what was short term, what was medium term, what was long term, the real traditional economics basics. So we are looking at 50-year investments, which previously was never on the cards. So that's another change. So as I said, change in a far more competition for family office funding, and because of the fact that normal areas are not being able to cover the debt that's been caused by the pandemic, and two, a move to more emphasis on direct investment, and thirdly, a move to where we had previous to the pandemic, we saw a great deal of what we call green ticking or greenwashing. So everybody wanted to be green, and they were all running to have some sort of green investment within their portfolio. Now we're actually looking, we've developed, things have moved on. So now it's no longer just save the planet. We actually want to know, we have criteria. We have actual criteria that we look at in terms of sustainability, in terms of what actual measuring that impact, that positive social impact. Naturally, that doesn't mean we don't look for the financial return, because after all, that's what we're investing for. It's not philanthropy, it's investment. So they still want a financial return. So those are the things. So we're seeing more realism, people asking for more transparency, especially within the so-called green tech, because when we're looking for carbon neutrality, at least, how carbon neutral is something if you're only looking at the end product. It's all the extra components that go into that end product. They too have to be carbon neutral. So there's more calls for transparency within the data that's available to the investor as well. So that's a very quick roundup of where we're going in the market at the moment. But certainly big moves into tech, green tech, transparency on how green it actually is. And most important of all, social impact is becoming more and more crucial. Family offices are very worried about the growing social unrest in many places of the world. A lot of upset people, especially because of the COVID has caused people to be worried about their jobs. Are they going to have a job after furlough ends? So they understand that this is going to have an impact on them. So they are looking at the social impact of, and that's why I was very interested in what my fellow panelists said about social impact. It is becoming much more of a criteria, but now we're actually measuring it properly with actual criteria.
Sure, thank you. Sorry. Yeah. I'll come to the Brexit and the other pieces in a bit. I think I wanted to understand a lot more topics and for the audience. So let me come to you, Tugce, right? So you mentioned you are deeply entrenched in the venture ecosystem, and then you work with a lot of funds. So just help us understand how has of course, the pandemic has kind of accelerated the technology adoption, and we have seen companies doing stellar IPOs, and then what has happened with the GameStop over the last 2 days. It's kind of, I think no one has seen in our lifetimes, right? So it's kind of, I would say, incredible, because I still fall under the retail investor group. So just help us understand, how the pandemic has, shifted gears in the venture ecosystem, especially with the focus on investing into emerging managers. And there has been a lot of discussion, in the US. And over the last 2 days, I think we have seen 2 unicorns, get coming into the market by founders of color. One is I think Calendly, and another one I couldn't recollect the name. But so there has been like a lot of focus on diversity, which again falls under impact, within the venture space. So just help us understand in terms of the investing into the emerging fund managers. So what are the trends that you're seeing within the family office space, and just any learnings?
Sure. So I think I can address that first of all, with my hat of a person who spent like 10 years in San Francisco, but also with my new hat from Europe right now. And it's definitely very different. Some of the things we saw 5 years ago in the States and Silicon Valley are just coming to Europe right now, some of those trends. And just earlier today, I was catching up with a friend from this family office, and they allocated half of their VC commitments to diverse fund managers and emerging managers in the last couple of years, and they keep increasing these allocations, and now it's become a relatively common thing to see. Whereas in Europe, that's still I think that's still not being practiced that much. A lot of like institutional LPs in the States have buckets just for emerging managers, just for diverse fund managers. In Europe, we're still not seeing this with institutionals yet. Again, in the States, in the last year or two, there's a rise of solo GPs. Again, in Europe, I think being a solo GP and trying to raise a decent sized fund would be very, very difficult. So I think there are all these trends, but we are a little bit behind in Europe. With that said, I think COVID, yes, it has helped in some ways because we've become more remote. It's made places like Silicon Valley maybe a little less of a, let me put it that way, like more places around the world have become relevant. We've seen startups coming out of places like Romania, Bulgaria, and coming to very high valuations. We have seen fund managers being able to back unicorns from very unexpected places from around the world. So I think COVID has democratized the VC scene a little bit, and family offices have been very receptive to that, and I think that's a very welcome change. In terms of sectors, for example, the sectors that we've been looking at, for us, not much has changed pre-COVID versus post-COVID, because for the last couple of years, we have been looking at how the maybe boring and sluggish old economy industries could change from all the digitalization we're seeing, and again, how we could benefit from all the efficiency gains in these industries. And I think with the unlocking of all the technologies coming out of the fourth industrial revolution and the sustainability agendas that we all have, I think the next decade we're going to see more fruitful results. Like everything we've been talking about in the past decade, I think we're going to start seeing these things materialize in the next decade.
Absolutely, I totally agree with those points. So just a follow-on question. So I think the angel list has kind of democratized VC investments, right? So I've seen like so many folks, especially just doing marketing on social media. We used to have this investor road shows in a typical mode of 12 to 18 months to raise a fund, but like now people have raised funds in less than 2 months. Solid commitments there. So with regards to the family office investing into the emerging managers, so in any specific trends that you're seeing, has there been acceleration in terms of the investing? And
yeah, totally. And you just reminded me of something I forgot to mention, and it's one of the trends we've been seeing. It's the rolling funds on Angel List, and it's a great opportunity for a lot of family offices to have direct access to these emerging managers. And sometimes they're not like emerging managers, they're very established managers just wanting their rolling fund on the side, and because they do it for fun. And yeah, so I think AngelList and platforms like AngelList and the rise of these rolling funds, etc., have definitely democratized the access to venture capital. But with that said, I think the traditional ways family offices get involved with venture capital, through funds, etc., that will always remain there. I think it will just be a more diversified portfolio. If in the past they were doing 80% fund investments, now they're doing maybe 40%, and they prefer direct investments for the remaining of their portfolios. And again, as Olivia mentioned, it is also stemming from the fact that some of these family offices are now going into the hands of younger generations, and the next gen want to be the VC themselves. We see it quite often in our family office network, and as someone who has worked with these family offices very closely, the family offices I invested with and helped allocate, now they're coming back to me and, hey, we will keep investing in funds, we will keep making growth equity investments or seed investments, but could you also help us set up our own VC practice in-house? So, and I think it's going to be a trend that we see more and more, because we will see younger people take things in their hands, and they will want to be more involved because it truly excites the next gen, I think.
No, I think can't agree more. So just I'll add one point on what we have observed, at SoHo. So the biggest trend that we have seen within the family office community is direct investing for sure. And I think initially it actually started as. So let me put it this way. So whenever we, suggest any families to get into a particular asset class, they should look into fund of funds and then go to the fund route and then start co-investing with fellow families. And then once they understand the space, get into direct investing route. So that's kind of the pyramid that, we advise to families. With regards to, the next gen's forming VC funds, I heard like both pros and cons as well. So in fact, like one family who's a next gen who told me actually that, Kiran, it is very nice actually to be a VC manager, to claim myself a VC manager, but unfortunately, for me to raise money from other families, there is kind of an inhibition factor because, as you know, the families are very close. It all boils down, okay, let's have a drink and then let's discuss about the trends, let's co-invest, that's all fine. But like going and asking money from another family, to invest into my fund. So the whole relationship changes there, it might not be, the same for all the families, but like, this is just the perception from that family, who shared that. So they were like, we don't want to go through the fund route, but rather we would prefer to have more co-investments and direct investments with the families, to keep the relationship, I would say, sane, and at the same time, not spoil that, at the end of the day, money spoils, right? So these are all like relationships that, the folks have built over decades. It didn't happen in any era or two. The families have known each other for decades and decades, and the relationships are still growing strong. No, absolutely, totally agree there, but this is just the viewpoint that I heard from.
Yeah, and I guess it also depends on the family office. So there are family offices who have actually great access to the top entrepreneurs, top founders, and they might not feel the need to go through the fund route, which is a fair thing. But there are also many family offices in different parts of the world that are missing some sort of a top quality access, let's put it that way. Maybe in their local country they have access, maybe in India or in Philippines or in Turkey they have great local access and they can get into the top deals, but they have a hard time getting into the top deals in France or like Germany. So it might make sense to geographically diversify. If you're a European family office, it might make sense to invest directly in Europe and then make small fund investments in different parts of the world. So that's one thing. And the other thing is, that's also what you mentioned is very true. And that's also changing the way traditional VC is done. For example, for my new fund, we tried not to get that much institutional money. Pretty much all of our LPs are family offices, and we want them to be like a big family. We're very open with them, like we introduce them to each other. We're not secretive at all about our LP list. We want to make sure they come together and they can explore different business opportunities together. And in the fund, we also made sure that they can co-invest with us. And one of the biggest reasons they chose to invest in our fund was so they can get into some competitive deals that they can't as a family office, because entrepreneurs will usually want some institutional VCs in the round. But if you get to co-invest with a fund, then it provides you with that access. So I guess you can tweak things around if you're going to your like other family office friends and ask them to invest in your fund. I think making sure that those co-investment opportunities are on paper could be helpful.
Absolutely, yeah. Sorry, I think in the best interest of the time, we'll go one more round and we'll do the closing remarks. So let me come to you, Marinella. So you briefly touched upon tokenization and securitization, right? So for the family office community, I think that is something very close to the heart. Of course, there's lots of education that needs to be done. I know the reason why I'm saying it's close to the heart is, so if you see the family offices, whether you take it from India, London, New York, I would say traditionally 70 to 75 or at least even 80% of their portfolio allocation is into real estate, right? And unfortunately, most of that is illiquid in nature, so there is no liquidity that comes through. And this is going to change. The tokenization as a concept is going to revolutionize on how we deal real estate. You fractionize it and then put it in the market, and then all of a sudden you are actually turning the illiquid market into a liquid market, right? It's going to be game changer exclusively for the family offices per se, where they can take that money and then deploy into other asset classes as well. So based on that, right, so what are the trends that you are seeing in the family office space, and where are we, in terms of the tokenization as a concept? Like, are families imbibing that concept, or are they talking about it, and like, just help us understand the pulse of the families with regards to this concept.
Okay. Not all the family office understand the process, of course, because they invest in traditional ways. So I think that if they don't have the right skill, they have to hire the right skill to do that, because if they don't understand, they will not invest in this. So first of all is to have the right competence to do that, or be driven by people that have the right competence. So they have to acquire, and they need to have mentorship too, because I do mentorship session also for other family office as well for university and for startup currently, because I use 2020 to improve education in the market. First of all, it need not for family office, because maybe they are aware about financial market, but to start up about the financial literacy. They need financial education first, because what we did to understand good in the good way the tokenization, first we start from securitization. So they have to understand about the difference between securitization to arrive up to tokenization. What is the main difference? The main difference about is the difference in investors, that we don't need institutional investors. We can have fractional investors, retail. So this is a big democracy in investment. First of all. Second is about the liquidity. We can make liquidity, for example, in a Picasso, in one museum. And what we like to is to do private-public partnership, because government, institutional investor need to be in, because to do impact investment, we have to be all together. So we need the institution and the private investors too. I'm doing the part now with the European Union, and to do some European Digital Innovation Hub. And we are waiting also to do some impact investing in post-pandemic. For example, we are doing some blockchain for vaccination, because there are some fraud, because it was in test, some fraud. So there are some fraud in vaccination. So to travel safe, let people travel again, to meet again, because we need human relationship.
No, I mean, I think I mentioned that in the keynote as well, earlier today. Yeah, this is just a crisis, right? I think we as human beings have seen so many crises, and this too just will pass, right? And we are all social animals, right? Human beings. So we love to travel, we love to take vacations, and the one thing that if I have to bet, right, I think I'll bet on the airline stocks or the tourism industry. But because the first thing people are gonna do soon after the pandemic is over is just take the flight and then land in Mauritius, Maldives, or Bali. That's what is going to happen. Trust me, like I'm badly waiting for that. Anyway,
this event next time, face to face with each other.
Exactly.
Last year, everybody we did this.
Sure, exactly. Very soon. So, Harish, and Marinella is actually talking about tokenization as a concept. So, I know in the best interest of the time, let's not deep dive further into that, but just ping me. I'm happy to have a chat with you, offline on that. So, Olivia, let me come to you. So, I think you touched upon key important aspects, and I think I wish we had like 1 more hour to discuss all that, but. So just help us understand from, I know we've seen like what family offices are looking at. Now, Brexit has happened, Jan 1st. Initially there was some chaos, and then I think things have settled down. And unfortunately, Europe is going through another crisis. Most of us are locked down. So, like, what are family offices looking for 2021? Within your.
To be honest, family offices weren't too concerned with Brexit. A lot of it was media driven. Brexit was going to happen. We knew it was coming, and most companies have actually got ready in advance. So it's a bit of a storm in a teacup, shall we say. And yes, there is the usual argy-bargy going on, and there's the usual, well, you do this, we'll do that. To be honest, when it comes to industry, we're too big for that. So the industry just carries on. In terms of family offices, I deal with that family offices across the globe, so not just in the UK, and certainly not just in the Eurozone, but in the US and in the Middle East, Israel, and even over into Australia and New Zealand. India is a very big market, and we have an entire Indian desk in our office, which purely serves our Indian clients. Likewise, we have a China desk. So we go right around the globe. So certainly the UK is not, because of Brexit, suddenly become one tiny little island. It's really just gone out. It's concentrating on outside of what's happening outside of Europe and going more towards the Commonwealth. And certainly within family offices also, I would say that post-pandemic, we are seeing and we are advising that the diversity is key. And when I'm talking about diversity, I mean diversity of investment and what's in your portfolio. But when I say diversity, it's not just within global, it's not just in a particular region or in a particular country, or even within the sector. You're diversifying in your investment within sectors. So if you're in the energy sector, that's fine, but you will also be potentially in health tech. So that's the one side of diversification. But key also we're seeing is diversification even within sectors. So you're not, for example, let's take the automotive industry. We're seeing much more research going into hydrogen. Hydrogen didn't have the sort of backing and the sort of subsidies that we saw EV get. So it's been the sort of poor relation of EV. But we're certainly seeing much more concern, much more research going into it, and it's become very popular. It's a popular area. But instead of just sort of investing in one particular area, you're seeing the spread, so both vertical and horizontal, investing in different components that can be used across the sector rather than just in one specific area. And that's where the diversification is coming in. So that's also been key for successful investing for family offices, not just diversifying in terms of sectors and in terms of geography, but also within that sector, looking at where your investment is going. Is it too specific, and do you need to diversify across various components? That's been one thing. Certainly, as I said, in impact investing is very popular. But it's grown up. It's grown up from being the sort of, how can I say, the protest on the street with students. It's grown up into really something that is advancing through entire portfolios. Previously, and I'm sure my fellow panelists will agree, when well, you're younger than me, but when we started out, we saw impact investing or just as a sort of a little area within the portfolio. You know, the tick. Oh yeah, we've done impact investing, so we can just tick that off the list. Now those criteria are spread right across and are being used to influence right across the whole investment portfolio, and that's something that's happened not recently, but has been a development, shall we say. But the impact that's coming is now more to do with actual transparency within industries. And certainly there has been a move to look at each component within industry to make sure the actual measure carbon neutrality. So, for example, and also to measure the social impact. So human rights are coming into it. If we're looking at, for example, just looking at EVs, for example, the battery will uses lithium and cobalt. These are rare earth minerals. The whole human rights debate around the extraction of these, and not to mention the environmental debate, that's coming to the fore now. Investors are asking for more transparency on these. We're not being able to shove that under the carpet anymore. They want full transparency, because it's no good just greenwashing and saying, yes, I'm driving an electric car, therefore I'm saving the planet, or I've taken a private jet but don't worry, I've planted 10 trees. That's not going to be good enough. Going forward, there's going to be far more transparency demanded, and we are going to expect industry to catch up with that. And as my fellow panelists were saying, there has been a lot more move to look at existing industries and how we can make them green, how we can make them more efficient with a realistic approach that is going to take time. And this technology is still in development stage. It's developing. You know, if we look back to the first cars that we saw at the turn of the century, I mean, okay, people collect them, but would you actually drive down to the supermarket in one of them? No, of course you wouldn't, because we've come so far. In the same way, this technology is new. It's got to develop. It's got to get its legs and run. But this is where we're looking at existing industries and how we can make them more efficient, how we can make them green, but with that transparency. So there is no longer going to be that, you know, okay, I've got the green wash, I've got the green tick because I'm driving a Tesla. People are asking, well, wait a minute, you know, if you're a vegan and you're eating, for example, soya products, what's the social impact of that? I mean, I'm sure you've seen the newspaper articles about the avocado crisis and so forth, and how that. But it's not to be laughed at. It does cause a social impact. It does cause problems in countries which are developing countries, for example. And that brings me to my final point, because I'll shut up now. But the other point with impact investing is to be creating that level playing field. That has also been very key. So, which is why hydrogen has been very popular, because it's a long-term plan, it's a long-term solution, but also it will allow for developing countries, namely places in countries in Africa, for example, but also other countries, to be able to enter into the marketplace on a level field with the rest of the developed world. So I think that's also been playing a big part in our investment strategy at the moment. So but there's plenty of opportunities in all these fields. So it's not a question of sitting on your hands. And I would say to people, don't panic. Yes, we're going through the pandemic. Yes, we've had Brexit. Yes, we've had all the hullabaloo in the US, but there's still very clever people out there with fantastic ideas. The planet, we can save it, and we can use our current industries to create jobs, and there is the technology there. So get out and start investing, because it's no good just sitting on your hands and putting it in an account in the BVI. Not that there's anything wrong with the BVI, but there you go.
No, absolutely. I think just one point, and then we will do the final comment. So, I think these days investors are super frenzy about alt meat and alt protein as a concept, right? There has been like a lot of money that is pouring in, and this is just my personal thought. Okay, like if you personally ask me whether if I as an investor will bet into those spaces, I might not. The reason is and do I say merit? Yeah, of course there might be, because I still don't understand the cause there, or why people are getting so frenzy about those two products. So like I unfortunately believe in this cycle, right? As there is this anthropological cycle in the world, and you need to respect the mother nature, for what it has given. And there is a ecological cycle, again, you need to respect the mother nature. And I think you raised a very important concept and a point there, right? And when all these companies are going frenzy and crazy about all proteins or all meats, which is plant-based products, yeah, they might exploit the resources, on planet Earth. Who knows?
It's another form of exploitation. We have to be careful that we're just not swapping one exploitation for another. That's the key point.
Exactly right. So in the name of not increasing the CO2, that's the thesis that has been put forward. We are exploiting, and we are harming the planet Earth and a different nature. Of course, I think maybe we should do a special theme or a session about that. Pros and cons. But thanks a lot, Olivia. So I think we actually ran out of time. But last, that 30-second seat. So what are you, final words of thought, 30 seconds each, for the audience there. We'll start with Tugce. I think you're on mute.
Oh, you're on mute, Tugce.
Yes, there we go. Can you hear me?
Yes.
So final thoughts on the future of family offices and investing in tech. I think we're going to be seeing more and more again family offices building their own VC practice, co-investing together globally. We'll see a lot of cross-border activity between family offices from different parts of the world. We're going to be seeing, again, we talked about like purpose economy, sustainability, transformative tech investments. And as Olivia said, I think impact investing was always there, but it was, again, just a box to tick. Now I think we're gonna be more structured around it. We're gonna be able to measure it socially, financially, for people and planet. So I think these are going to be the next big things in family office investing in tech.
Sure, Marinella. You're on mute.
Okay, for sure, family office will continue to invest in this new technology, and because digital transformation will impact any sector, so family office cannot be outside of the market in this. And they will look for ROI, of course, but for impact investment too, and also they have to look in this post-pandemic to look for investment that are inclusive, impactful, and eco-friendly. I think that these are the key, together with education, because I will put education always first. And we will be here also because of course there is always a strict due diligence in this that will be of numbers and of intuition and emotion and because we are people, and we will look for people that are humble to learn more and to be curious of the world, how about the future, how where we will go next year. The really value is to anticipate the trend. So to do this, you have to have the whole picture behind you.
No, absolutely. Can't agree more, and great insights. You need to have a global view. And I think to previous point of Olivia, right? I always tell families, diversification and differentiation are the key, for you to preserve the wealth and grow the wealth. In terms of geographies, in terms of asset classes, and also within asset class, sub-asset class, that is very, very important, to continue to grow the wealth or preserve the wealth. So Olivia, last few comments and we'll close this.
I would say that family offices are going forward post-pandemic with a much more positive viewpoint, but they've also picked up on the errors that they made previously about being too short-termist. So they're now looking for unicorns, but they're looking for the investments that will generate not just income or short-term capital growth, but will be kept for generations, will make that impact. But they understand that this is new, this is something that is going to be developing. So they're looking more at the long term, not just short term. It's now going back to short, medium, long term, which is quite correct, because nobody solves a problem in one step. So that's why we're seeing a lot of movement towards things like hydrogen, because it's considered the long-term solution.
No, absolutely. I think I briefly mentioned on the keynote, and I'll close with that remarks. So there are two to three things that are happening, right? I think we are at the greatest point of intergenerational wealth transfer that is ever happening in the history. I know trillions of dollars, 40, 50, 60 trillion dollars of wealth is getting transferred from one generation to the another generation, and the next gens exclusively are the ones who are going to lift up the mantle. And these are the guys who are very sensitive in building sustainable businesses and making planet Earth a better place to live. And with that amount of wealth that is getting transferred, I think I also closed earlier as well, right? The family offices are going to play pivotal role. There's no second thought about it, and the space is going to go very, very big in the coming years to come. And these guys are driving us to build sustainable businesses, and then as Olivia mentioned, anything sustainable, ethical mining, as we call these days, there has been a lot of debate that is going on how you treat the workers and employees in the mines, and the practices that are being employed. So I think, yeah, the family offices as a space, I think as the next gens, will shape, I think, the world that we will live in, and super excited for that, and I think glad to be associated with you all, and thank you so much for your time. I know we literally ran out of time. Yeah. On that note, yeah, thank you so much, and I look forward to collaborating with you all. Rajan, over to you on that note.
Thank you. So conclusively, we come to summarizing it. Family offices are here to stay. They are here to stay and to make a social impact in a bigger way. And they are here to stay for tech investing. That's what we summarize, and we end the session. Thank you, Kiran, for taking out the best from the panelists. Thank you, Olivia, Tugce, Marinella, for giving a great insights. The takeaways are very good for the audience. Thank you very much. We look forward next month.
Bye-bye.
Thank you.
Bye.
Thank you. Bye.